Good morning, traders. This is a live trade recap. I took no trades this morning, and I'll tell you why in just a moment. But if you'd like to download any of the tools that you see me use in these videos, like my 2R calculator and my spreadsheet and all that stuff, just go over to the YouTube Trading Armor homepage, click on the little Facebook icon. That'll bring you over to the Trading Armor Facebook trading group where you can become a member. Then you'll click on files and you'll have access to all of that stuff. So, as always, I start with Webull on the markets pane, and actually it's going to look like this when you start out. Click on top gainers, pre-market, then select all. I like to organize it by volume because the stocks with higher volume have a better chance of continuing higher. So I was looking at Immp and ELSE. OCGN has too large of a float size. My cutoff is 110 million shares. And the reason why is because even if they're in the top gainers list, when they are higher float size, it takes a ton of volume to move them, and you can see this one being only in the number 2 spot with basically 1/3 the volume of the number 1 traded stock has only been able to move about 5%. So that's not really worth it to take a trade on the 1-minute chart. You're not really going to make any money doing that. So I don't look at that. So I was watching Immp, ELSE, and at some points Avct. Now, Very is a very interesting stock, believe it or not. It was only like number 13 while I was trading, so it wasn't something that I could trade. And in fact, it still isn't according to my current plan, but I'm going to talk about a possibility and not a modification, but an addition to my strategy that I might try. So let's take a look at the watch list and see what I'm talking about. So first of all, on the top 3 volume stocks, I marked out the previous session's high. So this is a high from the aftermarket from yesterday. This is a high actually that was established on the 402 candle on Avct, and then over here the high is from the aftermarket, and you can see that none of them broke through those highs, and this one became not tradable, at least for the moment, right away, because here's the first 1-minute candle, which looks, I mean, actually there's 754 shares there. It looks like there was no volume there, but there was some, and it didn't move. But and then it immediately shot up and broke through the previous high, but then it came back down through point A. So at that point it becomes not tradable as far as my criteria is concerned, because the ABCD pattern is broken. Any trade immediately after this is a reversal trade, which I don't take because they have less probability of working out as far as my statistics show. So yeah, in here there was a reversal trade that did work out, but even still it's not that great of a trade, because let's just trade it hypothetically here. If I got in for the break of this candle, let me see what the low of this one was just to see. Yeah, actually it must have had a big spread there, because no, it's only 1 cent different. I was looking at the low versus the low, but if you look at the high of this candle, 825, and the low of this candle, 826. So let's just assume that we got in at 826, and the stop loss would be 817. So we can use the 2R calculator to figure out what our profit target was, 826, and I think it said 817. So hit enter, and then the profit target is 844. Look at the risk is 1.09%. So when the risk is that low, it is not usually a very profitable trade, although it did go to 844. So you would have made 2% on that, and on this account I would have been able to buy. Let me calculate it really quick because I'm trading with $70 right now. 70 divided by 826 would have been 8 shares times, what did I say the risk was? 9 cents, so times 18 cents, so $1.44. So not very worthwhile for me to trade, or probably anyone else. So, and I just brought that up as, you might look at this and say, oh well, that was a nice 2R trade, but really, was it? But anyway, it doesn't matter because it doesn't meet my criteria, which says that if the ABCD pattern is broken, that I can't take a trade until a new high is established. So it would have had to come all the way back up here, break out through that 895 level, and then on a pullback from there I'd be able to take a trade. So that's that. And then VERY was really interesting because the time that I pulled it up, actually what I did, because there was nothing going on at all with these top 3 stocks, organized by volume, nothing going on. So I started to just scan down with my eyes down this pre-market top gainers list, and I noticed that down at the time, I think it was at 13, VERY was up over 100%, and that definitely caught my eye. So I, started considering also looking at just the number one stock, because there's a problem with organizing this list by pre-market, and I'll explain what that is. Or even if you just look at this list, this is something I used to do, was just look at this list here, and I would look at all of these stocks or 5 of these stocks or something, and not even bother with organizing by volume. And this one just organizes by the percent gain, which seems like a great thing, but the problem with that is, let's just pick like a random one. Let's say you looked at all 10 of these. So let's just go down, let's look at RICE, RICE. I'll show you what so let's reset the chart. So the problem with just working off of that top gainers list is generally there's going to be lots of stocks with no volume. And let's see what the float size, yes, 23 million shares. So it is a low float stock, but look at this. This is a 1 minute chart, 50 shares here, 100 shares here. So this is not really tradable. I bet the spread is pretty large. It's not as big as I thought it was, but I bet you this is going to move a lot. It's going to change. So these are really dangerous to trade, because you could get in, and first of all, when you buy in, you're going to get affected by that spread a lot. And wherever you want to get in, you're going to end up getting in much higher. And the same thing on the way out, you're going to get out lower than you want, unless your trade is successful and you hit a limit order. But even this one is not tradable anyway, because it's trading below the previous high. But this is just an example of why just looking at the top gainers list is not very useful. And that's why I always organize it by volume. But I was considering today, again, this was down number 13, organized by volume, so it was still pretty low volume, but it's an extremely low float stock, 1.74 million shares. And so I put it on the watch list just to watch it. I didn't actually take any trades, but you can see I marked out kind of like a theoretical trade. At the time I pulled it up, I believe this candle was forming right here, and you could see that initially, so it didn't start trading until 4:13 a.m. On that candle, 101 shares, 99, 440. And at this point, I think it moved up. Let's see, we can calculate it roughly here. So it's about 3%, 19%. So altogether, that's 22%. And then another 13%, so 35%-ish. And people must have started noticing it at that point and came in on this candle and pull it up. After this candle it was probably over 70% of a gainer. And so I'm sure many traders saw that on their top gainers list, or pre-market list, and started selling off at that point. But this is when I noticed it was right around here, and I just said, well, let me just pretend, what if I did trade it, would it work? And again, this is only a sample size of 1, so this does not tell me really anything about how reliable this strategy would be. But I'm definitely considering at least throwing whatever the number 1 top gainer is on the list, just to keep an eye on it, and possibly taking a trade, but of course taking my stop if it doesn't work out to protect me. So what I was looking at was the first 1 minute candle to make a new high. So over here, the top of this candle was 22.96, but at the time this thing had a big spread, bigger than this, 96 cents. So I just figured, well, what if I get in, about $1 above that, so like 23.96, I believe is what I put. Yeah, so if I got hit by the spread and got filled $1 higher, 23.96, and my stop loss would still be 1 cent below this candle, then my profit target would be 31.90. Look at that risk, very high, 16.57, which also means the reward is greater. But again, if I would have lost that trade, I'm looking at losing $4 per share. At that price, I can only buy probably about 2 shares, so it would be an $8 loss, which is still considerable. But the gain would be about $16 there, so it would have been a nice gain as well. and it did hit my profit target. You can see on this candle, kind of just barely, because if this topping tail means that the price was whipping around there. So there is a small chance that I would not have gotten filled there, but more than likely I would have, because it went way above my my profit target, and there was a considerable amount of shares there. So I would assume I would have gotten filled there. But that's the problem with back testing, is you don't really get the full picture. You don't know what happens until you're actually really in the trade. But anyway, this was interesting enough to me to at least consider throwing the top, very number one only top gainer on the list. So if in that case, you could just organize by the pre-market top gainer and put that stock on the list. And of course, I'm still going to be looking at the top 3 volume stocks. So anyway, hopefully this was helpful to you guys and you learned something. Let me know if you have any questions about these no trades or any others that I actually take. And as always, let me show you really quickly that I didn't take any trades. I'm not hiding anything from you. So you can see daily P&L is 0. Today's orders, there's nothing filled, nothing canceled. So there was no trades taken. The account is still exactly where it was yesterday. And I think that's it. And I will just say one last thing is that, on days like this, back when I was a newer trader, I would say, well, even though there's nothing that meets my criteria 100%, I'll take the very best stock, maybe just the number 1 volume stock, and look for some sort of entry. And you're just really taking chances that you don't need to take and putting yourself at higher risk. Like, for example, here is probably the first entry I would have taken if I was doing something like that, and that would have been a loss. And then the next one looks like it would have worked out, but again, at that point I might be just slightly green, and is it worth breaking your plan? And there's definitely a good chance that that second entry would have failed as well, and then I would have been kicking myself for taking a less than ideal setup. So it's best just to turn in one of these no trade days when stuff like this happens. Break even is always better than red. So keep that in mind, and once again, always take your stop losses, always honor your profit targets, and in the long run you should be green. Take care.